Welcome to Homebuyer Seminar. Wow, buyer activity picking up. Interest rates, I don't know about the rates, they're staying where they are, but 50-year mortgages, what's that about? I'm Bill Gross. Welcome to our Homebuyer Seminar, along with my good friend and colleague,
Patricia Castillo.
and our good friend and lender, and the guy who's going to make those 50-year loans.
Shannon, the lender.
So let's start with that topic. Shannon, can you make a 50-year loan today?
Not yet. Not yet. It's been
Tomorrow?
proposed, but not tomorrow. Maybe in the next 50 years. But yeah, I mean, this is again just to tackle the affordability part. Um, I don't know, guys. What do you guys think? I don't know, because usually there's 40 years are out there. There are 40-year mortgages out there, but again, you get a higher rate. So does it, can a 50-year mortgage help with affordability? Maybe, but at the long run, you're going to be paying way more in interest. That's the bank is going to make way more money. So
Well,
I don't know.
yeah, I mean, I think you're going to spend more money if a buyer buys a property with a 50-year mortgage, does not refinance or sell the property before that, right? But I think it's just another way to get into a property, and most homeowners will end up refinancing or selling within the first, 5 to 7 years. They
Yeah,
end up
that's correct.
upgrading, buying a larger home, and I don't really see anybody holding on to a 50-year mortgage, especially with the interest rates fluctuating.
What's a third-year fixed rate today on a Fannie Mae or an FHA loan about?
FHA, you're at about 5.25.
Okay, so just to kind of put a fine point to it, if someone got a $500,000 mortgage, and I'll make this a little bigger, $500,000 mortgage at 5.25% interest and a third-year fixed rate, the payment, there's a typo there, is 2761 and 2 cents. If you go the 50-year mortgage, which is 600 months, it changes to 2359. So the difference is 400
400.
bucks, about 20%. Now, for first-time home buyers, what's important is, they're going to make the money in the appreciation, probably number one. And number two, people looking at a longer term holding a house isn't a bad thing necessarily. If you're buying it to raise a family or to grow up in or something, obviously for home flippers, it's going to, you're not paying on the mortgage as quickly. My guess is the rate will be a little higher for the extra risk, but to lower the mortgage payment by 20% doesn't change taxes, doesn't change insurance, doesn't change PMI. Assuming the rate's the same, it's about 20% reduction on the mortgage payment, so it helps a bit.
It helps a lot. I mean, if
Yeah.
Yeah,
$400 is
a month.
keeping you out of the home buying process, then $400 is going to make a big difference for a lot of people.
For some people, $400 is like half of their truck payment. Those are called non-home buyers. For home buyers, you're going to lower your mortgage payment by 20%. It might be enough to get you into the deal.
Yeah, and the other thing is
And
you might be able to increase your purchase price. Now that the
yep,
payments are
that's what
spread out more, you may be able to buy a larger home or a nicer home. The move-in ready homes are definitely more expensive, and lately I've been seeing buyers that really want a move-in home. I mean, buyers are busy. They either have kids or jobs or work from home. They don't have time to start a new project with painting, reflooring, remodeling. They'd rather pay a higher price going into the home knowing that they can just move in and not have to do any work.
Well, and also not have the expense, right? If you're buying a house, you're scraping in your money for down payment and closing costs, then you have the expense of the work, the repairs, and the unknowns, right? You think you're fixing a wall, next thing you know, you got some mold behind it, you have a problem. So definitely, that's why I think for particularly first home buyers, that's why it's so important. Let me just do
yeah,
this
and
also.
that's the key too. Is the other thing too is, are the banks going to change the interest rate on a 50-year rate? Because I know 40-year, the interest rate does change. So I don't know if 50-year will it change, and obviously that's going to defeat the purpose. Because there's one thing about having a regulation There's nothing with banks implementing that regulation and how they're going to do it.
Well, the 4-year mortgage is not a Fannie Mae or FHA loan, so that's
Oh,
why
that's
it's a
true.
little higher. It's already a portfolio loan.
That's
I
true.
think the goal here, if what's being floated is for FHA, VA, and Fannie Mae loans, where the government has guarantees, and there's things they can do to keep that rate competitive with the 30-year. Just to kind of run some numbers again real quick, and numbers vary, but at 5.25, a $500,000 mortgage payment is 2359. A 585. Oops, I'm sorry, I did that wrong. 500. $500,000 mortgage payment, 525 is 2761. If you go up to 585 on a 50-year mortgage, it's about the same payment. So you go from 500,000 to about 585 loan
that's a big-
amount. Yeah, it's not 20% more, but it's a good solid 15 and change. And again, this is going to raise your property tax payment a little bit and your interest rate payment if the higher sales price. But again, call your lender, get on a waiting list of when that loan's available, run the numbers and see if that's something you need to make the difference. If you don't need it, you can buy now, refinance later on lower repayments. There's all kinds of possibilities.
Yeah. And then also too, you heard that now they're going to not require a FICO score for DU, but they're going to pretty much look
Okay.
at your overall credit, portfolio. So for example, that's a scenario, they gave a specific scenario of if someone has, again, maybe an ex-partner that, trashed their credit, they now are going to take that in consideration. So maybe that whole co-signing thing, I might eat my words on that if that does seem to be the case, but that's what they're saying is, hey, we're going to look at their overall credit portfolio. We're not going to just look at the number anymore. Because I think that the minimum requirement was 620. Now that's going to change. So, I mean, a lot of good news for buyers. I'm a little skeptical about the 50-year mortgage. I don't know, obviously, because I'm the numbers guy and I see how much more you're going to be paying. But I do see it does lower your monthly payment. It does raise your purchase price. So, it does get people, in the door. I would say for more purchasing power. So that in a lower monthly payment. So I do see that.
Well, even better would be an interest-only period, 5 or 10-year interest only, even lower than a 50-year mortgage. And I think in some ways is a better financial option as a taxpayer. The risk that you're taking, going past 30 seems inherently risky versus if it's interest only, you know what those risks are, and you have to watch the LTV, the loan to value, a little bit more closely. And to your point on the credit score, it's interesting. I'm just curious to ask both of you independently, how many buyers do you get that have a below 620 FICO score, 619, 610, 595, that you think without the FICO score they would qualify? In my experience, if your credit score is that low, you have other problems and you probably can't buy a house in this environment. There was a time when you could, when money was being kind of given away in the 2008-9 period. But do you see buyers today that could buy but for their FICO score being below 620, that maybe eliminating the score will make them available?
I actually had one. I had one that, again, their ex-partner had a mortgage late, and in the divorce decree, the ex-partner has full control of the house, is responsible for the payments, but on the credit score, they didn't refi, so I couldn't get her a house because she had a mortgage late. So maybe in this situation, yeah, but it's very rare. It's like 5%.
Mm-hmm.
Everyone else has, everyone else has, yeah.
Yeah, it's very low. I haven't really had, because like you said, Bill, if somebody has a credit score under 600, they probably have credit card debt or something else that's hindering on their credit report, maybe a prior bankruptcy, something like that, that's going to get in the way of them buying a home, not just a credit score.
To your point on that, I think what more likely happens is, to Shannon's example, and I'm an example of that, where if the credit score is not as important, you just won't repair it to get the score higher, which is really kind of like a game, right? Like I have an example. I was talking about credit scores last week on my podcast. So I haven't checked my score in a while, and it wasn't what I thought it would be. And I found out that I have an overdraft line on my business account where keep money all the time. I write checks all the time. I have a credit card with them, and I have a line of credit with them for overdraft. And somehow along the way, there was an overdraft, and they were deducting payments. It was set up to be automatically deducted to avoid, late fees. Somehow, I never got noticed of a late fee. I mean, I get emailed on all my transactions from my bank, every single one. Nothing on pay due, nothing on late fee, and I had a 120 late at the same bank where I keep a pretty substantial balance for my business. And now, if I was buying a house, I could get that deleted. If I didn't need it deleted, I otherwise qualify. I'm not going to bother with all the hassle of going to the bank and asking Wells Fargo to be decent human beings, because they're not. But anyhow, my point is, I think some of this stuff is convenience, not necessarily really helping people buy a house. And but whatever makes it more convenient, I do think that eliminating the credit score makes some sense, in that we still have to look at foreclosures, we have to look at bankruptcies, debt ratios. A lot of stuff that I find in credit scores is just more administrative nonsense than anything else.
Yeah.
Right.
Yeah.
And it's talking about, what we were just saying about the credit score and other things that could bring down your credit score. It takes time for your credit to heal. So even if you paid off that debt that brought your credit score down, maybe your credit was overextended because you had a lot of accounts open and you came into some money and you paid them down. It takes time for your credit to go through that healing process. It's not instant. Even though you made a payment today or paid off a card today, you have to wait for your credit to start to improve.
Your credit has PTSD and it needs time to relax and settle down.
Well, I think these two things do speak to the overall problem. Is the government does know that there's an issue with affordability, and they're trying to do something about it. And now, I don't know if you heard the new statistic, the new average first-time home buyer, what has jumped up to 40 years old.
40.
So there is a problem out there. And the writing is on the wall. I think they're trying to fix it hey, at least they're trying to do something, right? They're not just sitting on their hands on their lap. So
yeah, it is really sad in a lot of ways, how the younger generation is abused. I'm actually going to post this on my podcast this coming week. When I started the business, the average first-time home buyer was below 30. That was me. In 1986, I was 27 or 28, I bought my first house. And so the industry kind of set up to help younger people. Now the average first-time home buyer is 40 years old. And you go on real estate websites or you go on mortgage websites, and they always show first-time home buyers being these young couples and they're holding a kid, which is nice, and of course we want to help those people. But the reality is the industry in the last 10 years has really moved away. And here's another chart that kind of shows that reality. This is of foreign-born people, and that's another issue. Again, people are born and come here legally. But we've had massive people come here illegally who got FHA mortgages and got mortgages and competing with citizens. And one of the effects is people come here who are older, got mortgages, and our younger generation has been priced out. So, but this is a reality, and it's very, very tough for the young generation, I think, to compete.
So you'll be 40 years old, buying your first home with a 50-year mortgage and paid off by the time you're 90.
Well, but by the time that happens, with AI, we'll be living to like 240 years old. I'm 66. I can't imagine living past 100 years old. I just physically, why? I get why people just stop wanting to live. Just you have aches and pains. You have a car that's old and you have to repair things all the time. But once your body, repairing things is a little more of a process. I get it's challenging. I get
it. Takes time to heal, just like your credit.
Takes time to heal. Yeah, you got to take care of yourself, just like your credit. You have to stay on top of things and get. Right. I mean, yeah, definitely. Unless you're young like Shannon,
no, it's tough for the younger generation. I was also reading an article that a lot of the AI jobs are first initially going to hit the entry level jobs. So people, our young generation, and also coders and software engineers. So anyone who's 18 to 24 trying to, get their first job, AI is going to hit them first. And then now it's like, how do I build experience? How do I build, a resume? So, that's why we probably don't feel it right now, because a lot of our clients are, past that. But yeah, that's what they say AI is going to hit first, is the entry level jobs.
Oh, I should be out of business. I should have been out of business 5 years ago. But the COVID thing made that next generation just retarded their growth as a group. And it's worked out really well for me. I do think that the young people who seek counsel from mentors and seek time in an office environment to learn, to be around people, seem to just grow tremendously, have tremendous opportunities. And they have to fight the urge to want to work from home, which is certainly convenient, and I enjoy it. But when you're young, you have to be you're getting paid on your experience more than your salary. Even you get a job and gets paid $50,000 or more, right out of college or trade school. When you're young, you need to look at those first jobs as really continue your education and growth. That's the real value of what you're getting. The fact you get paid can be seductive and take you off track. But I just find the young people who are in winning organizations and learn, and they maybe break off and start their own thing. With AI, the sky's the limit. There's never been a better time to do business. It's amazing the things I can do now. And I'm older, so for me to be able to do it faster is a real blessing. And young people have an aptitude for these things. And so this should be the time of their lives. But you have to push yourself. And that's everything. That's buying a house. That's building a real estate business or a mortgage business. You got to push yourself. But if you do, there's never been a better time to build a business than right now for anybody, any age.
I agree.
In my lifetime, not even close.
The gap is for sure going to get wider, though. That's for sure.
Yeah, I think the temptation. Some people take ease your times and take that temptation and don't put the time in. And the ones that work hard. And I talk to young people who are just very resentful and very upset and feel like life's passing them by, and they're not doing anything about it. I see other young people who are on the hustle and working hard and learning and growing, and then all of a sudden something breaks through for them and they're just hugely successful. It's just crazy, some of the opportunities. Like you, Shannon, one of the big successes of my life.
I appreciate it. Yeah, no, I'm very fortunate.
And Patricia, I remember Patricia when she was just a brand new agent and she was a buyer's agent only and she didn't know what she's doing. Look at her now.
I know what I was doing with an escrow background. Well, yes, but in sales, it's a little different.
Yeah.
But the same thing there was, as I said to you when we first met, you don't realize the value of your education while working there. Yes, they didn't pay you as much as maybe you could have competitively, but they paid you in experience and knowledge that you've leveraged to build this business you have today. And we all, I think, I'll say about you, but I say about myself too, we all underappreciate the value of our experiences and education, but that's really the real value. The difference between me and Google or me and Facebook is what I did in my life, whereas Facebook has to be programmed. I already went through it, and I'm a human being both. So,
yeah, there's some things in life that you cannot learn by going to school, like escrow, for example. If you're going to be an escrow officer for residential or commercial, you have to. It's a hands-on job where that you end up learning all of the issues that come up, the problem solving, the timelines, communication with multiple parties on one file, and staying on top of deadlines, and bringing everybody together, bringing all the money together, all the documents, everything. It's a wonderful job. I really, really enjoyed it.
It's interesting. I have an escrow that we opened escrow, fell out of escrow, we reopened escrow. And I assumed the seller had signed the opening package the first time around. They never did. So here we are now. We're ready to waive contingencies, but we know the payoffs, and the buyer's asking us for credit, and I don't have payoff figures on 5 liens and the first mortgage. And so I'm trying to say, the seller wants to know, well, how much am I going to net out of this? And the answer is, I don't know. Maybe we have a short sale if we agree to this. So, the escrow officer, I'm not going to blame her, and I should have been on top of it. And I have one of those customers, we tell customers all the time, fill stuff out right away. Help us get started. Give us the authorizations. We can't technically do anything till you sign the papers. And on the other hand, they don't want to do it until the last minute. Well, there's a case where now we have a problem. And but a good seasoned escrow officer like you probably would have been a little more forceful on it. I kind of assumed, and I didn't really follow up to notice the first package was never signed. Now we are scrambling. So these are little fundamental details that make the difference between they're not a problem until they're a problem, and then they become a problem.
Exactly.
Okay. So what's happening this week? I know that Patricia, you've been showing buyers, but you're not the only real estate agent out there showing buyers property, are you?
No, there's actually, so we had an open house this weekend in La Palma. There was quite a few people that showed up. Actually,
Nice.
before I even started the open house, there was an agent already showing the property.
Nice.
There were 3 showings before I even got there because we get the notification through our email when the super box is opened. And so during the open house, there was a good amount of people that came in, and I've been showing property to my clients as well. So I can say from being in this every day showing property, one of my clients, we sent out 3 offers on 3 different properties, kind of in the adjacent neighborhoods in LA County. And one of the properties was already over 100,000 of the list price. Another property that we made an offer on, there's 24 offers on it. I just received a counter offer today. And the agent called me and said, there's 24 offers, just FYI. So come in with your highest and best price.
Wow.
So when we were doing this home buyer seminar, just a couple of months ago, we were talking about how sellers were helping with closing cost credit. They were helping to buy the rate down. In the market that we're in here in LA County, that is starting to go away. All the offers that we had out, there's no concessions, and sellers are just looking to net the most that they can. And they can when you have at least 5 or more offers on a property. Now, when you have 24 offers, obviously that property's in high demand. You're not going to get that seller credit because they're looking at netting out the highest amount. So it's busy, let me tell you. Fourth quarter, right before Thanksgiving, right? We're in the holiday season. It's definitely a busy time right now. I am seeing more buyers at the open houses and scheduling appointments. It's been a busy couple of weeks.
Nice. Well, it's
Jen,
good to hear
I
that.
have an offer out on a different client of mine. I've been working with her for a while now, and she really wants this duplex. So they just dropped the price today. So I submitted an offer. And it's funny because I was going to ask for a credit for that amount, but the price just got reduced. So you have to also act quickly. When you see a home that you've had your eye on and the price gets reduced, that's the time to send in your offer immediately.
Yep.
There was a property talking about 8292 Bellhaven Street in La Palma, listed 1.250, just came on the market and it's had a lot of activity. And listing courtesy of yours truly, and Patricia's helped me on that. And if you want to see the property, feel free to, website's not working very well here, but anyhow, talk to Patricia. We can get you a private showing and get you the inside scoop on this one, if that's what you buy in the desirable area of La Palma.
Really nice area, nice big swimming pool, large backyard, large front yard. It's on a really nice street, wide street. It's lots of parking, really great location.
Nice area. Okay, so if you're interested in that one or any other property, see Patricia or see Shannon and get yourself qualified for that. Shannon, what are you working on these days?
Oh, we got 9 escrows in place, so 3 of them are in docs this week, and hopefully me and Patricia will get one in next week. And just busy, real busy. So the overall message is it is tougher, but people are getting it done. So if you want to get it done, people are finding ways.
Mm-hmm.
People are for sure finding ways.
Nice. And so if someone's going to hold you, what's the best way to get hold of you?
My Instagram, FUND Fund with Shannon, or my phone number, 661-317-8484.
And Patricia?
I'm at 323-365-9909.
That's a wrap for this week. Homebuyer Seminar, we do it every week. We're dropping a new episode on Friday. If you have questions, reach out to Patricia or Shannon or me. And as always, have a great week. We'll talk to you soon.
Bye.